Hey fellow stock guardians, happy Tuesday, June 29th, 2021. I'm Hoda, a stock card CEO, reporting to you from a green stock market. Today I looked at the new consumer confidence report that sent the market into the green but only barely, discussed Cerevel Therapeutics' positive clinical trial test results, and researched Jumia's downward trend since hitting an all-time high in 2020. All three indices finished Tuesday in the green, but only barely. This may be due in part to the new consumer confidence report released today. This report gives us an idea of how consumers see the state of economy. The report shows growing labor market optimism and a purchase-oriented attitude going forward. The S&P 500 was split roughly 50-50 between gaining and losing stocks today, with not as much market breadth as you would expect for ending 4 days in a row positive. This may mean investors are more interested in specific stocks than the markets as a whole. Before we talk about specific winners and losers of stocks for the day, let me give a big shout out to all of you stock guardians. Thank you for watching, reading, and listening to the daily market recap reports every day. As you know, our mission is to make investment research painless for you. And if you haven't already subscribed, make sure to hit the like button and subscribe to the show, or create a free account on stockcard.io to get the daily market recap reports. Cerevel Therapeutics Holding, ticker CERE, was one of the biggest gainers on a stock card's winners and losers list today. Cerebral is a neuroscience research and development company with plans to revolutionize medical treatment for mental diseases. Yesterday, it reported positive clinical trial results for the drug Cerevel-231, which combats schizophrenia. This once-daily medicine has much fewer side effects than other treatments, so it's not a surprise that the company's share shot up 136% today. Cerebral has multiple compounds currently going through clinical trials and more in the pipeline, so the stock can keep growing. But at the same time, it has the risk of crashing if there is bad news from any of the trials. When it comes to drug development stocks, what matters is whether the company has enough cash available to keep at its trial without running out of money, and drug development stocks are typically risky bets with extreme volatility. So if you invest today, be ready for high volatility. For the loser stock of the day, let's talk about the Amazon of Africa, as they call this next company. Over last year, Jumia Technologies, ticker JMIA, share price shot up over 398%. Today, I'm looking at the stock because of its 21% drop this quarter only. It's currently hovering quite lower than its all-time high. Even over a few months, such a high price jump is hard to sustain for any company. This is even more difficult if you struggle to turn a profit like Jumia. Despite being widely used in 11 African countries, the company has high overhead costs, such as upkeeping its warehouses. Therefore, Jumia is transitioning its business model. This includes expanding into the third-party and dropshipping market and investing in infrastructure for pickup locations. May's earnings reports reassured investors that the company have a strategy to become profitable. Moreover, its new fintech division, Jumia Pay, is expected to increase profits and encourage customers to purchase more from within the Jumia ecosystem. While the transition may look promising, it puts the company through a rough patch. I worry the company is stretching too thin geographically and across several business units, attempting to expand and evolve so much of its strategy at once. As an example, revenue was down 13% last year, partially due to these growing pains. Nevertheless, Jumia is on track to be a massive player across the African market. The challenges to scale operations is such a big hurdle that it would be hard for other players to achieve what Jumia has already done. So my strategy is to bet small and steady when I find the stock beaten down like it is at the current prices. That's it for today. If you haven't already done so, please give a stock card a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the stock pick page on a stock card platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHRCEO, all lowercase in one word. And as always, make sure to subscribe and share these market recap reports with your friends and fellow investors. Come back tomorrow for another episode of Market Recap Reports. See you tomorrow.